Welcome back. I remember a client who called me to help them out with their insurance claim. They had awoken early one morning to find water several inches deep throughout their house. The culprit was a broken water heater. They had been working with their insurance company to little avail and were at the end of their rope. This insurance company had sent them a denial letter taking exception to the damage to their tile floor, which was a significant portion of the claim. I read the letter and it looked dead on, but something was bothering me about it and I couldn't put my finger on it. I agreed to try and help them, and the first thing I did was order a certified copy of the policy for the date of loss in question, and then I read that policy cover to cover. Then it hit me. The adjuster had brought together two separate pieces of contract language to form an exclusion that wasn't actually contained within the policy. My client, not having a copy of their policy and not understanding what it said, was ready to take that denial on its face value. When confronted, the insurance adjuster retracted the denial and adjusted the claim to its full value, over $117,000, and that was up from around $46,000 that the insurance company had wanted to pay. Not knowing how to read the policy and not having an accurate copy of the policy could have cost them almost $70,000. Now, insurance policies are terribly boring, but understanding what they say is where the money is. Whether I am representing an insured or consulting as an owner's rep, I always begin by learning what the policy covers and what it doesn't. This video and workbook is an introduction to understanding how to read your insurance policy. Before we begin, I need to insert a word of caution. This workbook cites from the Homeowners 3, that's HO3 10-2000 edition. Chances are your policy will have a different language, so you should use this material as a guide when reading your own policy and follow your own policy's terms and conditions over these instructions. So let's get started. Homeowners policies are divided into two sections, Section 1 and Section 2. Section 1 coverages are known as first-party coverages because the insurance benefit is paid directly to you, and I might add any other party legally entitled to receive payment, such as your mortgagee. Section 2 coverages are known as third-party coverages because those benefits are paid to a third party on your behalf. For example, if someone were injured due to your negligence in maintaining your home and sued you, Section 2 benefits could apply to cover both the cost of the defense and the potential judgment levied against you. In this video and workbook, we are only going to address Section 1 coverages. Section 1 is further divided into four separate coverages. Coverage A, dwelling, Coverage B, other structures, and these are also sometimes known as appurtenant private structures. Coverage C, personal property, and Coverage D, loss of use. Now, if you live in a condominium or an apartment, you may not have Coverage B, and you probably won't have Coverage A if you're in a renter's or apartment form. So let's get started learning about your policy. This will be a high-level pass, and other workbooks will delve more deeply into each of these coverages. The policy begins with the declaration page, or deck page as it is sometimes called. The deck page contains all of the information needed to reconstruct your policy. It contains the name of the insurance company providing the coverage, the name of the named insured, the name of the agent, the inception and expiration dates, the policy number, interested parties to the policy such as mortgagees, the deductible, important policy information required by law, the policy limits, forms and endorsements that are part of the insurance policy, underwriting and rating information, and additional fees that may apply. This is the first part of the policy that you should review. A sample deck page is included in this workbook with the appropriate sections highlighted and noted to help you in understanding this document. The most common coverage form for homeowners is the HO3 special form, and this is the form that we're going to examine. If you understand how this form works, you'll also be able to understand how other homeowners forms work. The HO3 is open peril on the dwelling and other structures, and name peril on the personal property. The term open peril is used synonymously with all risk, but the association is not an accurate one in that all risk implies that everything is covered, and we both know that there are many exclusions taking exception to coverage contained within insurance policies. The term open peril is more accurate. FYI, the phrase special coverage or special form describes open peril coverage, and this is the phraseology used by agents. The difference between open peril coverage and named peril coverage is this. With open peril coverage, any cause of loss not specifically excluded and which causes damage is covered. With named peril coverage, only that damage from a cause of loss that is specifically named in the policy is covered. A sample HO3 10-2000 edition form is also included in the workbook to aid you in understanding this form. We're going to briefly review the policy parts in the order in which they appear. Note your policy may be different in both layout and coverages provided. The Homeowners 3 Special Form begins with the insuring agreement. Simply stated, the insuring agreement says that you get the insurance in exchange for your payment of the premium and your compliance with the terms and conditions of the policy of insurance. Now, all policies have words or phrases that have specific meaning. This meaning is set forth in the definitions section of the policy. If a word or phrase is not defined, the broadest and most commonly understood definition is applied to that word or phrase. You can easily tell those words or phrases which have special meaning. They are either enclosed by quotation marks or they are bolded. The homeowners policies usually use quotation marks. The 10-2000 edition of the HO3 contains a deductible section which is not included in some earlier versions of the form. The language confirms that the deductible applies to the loss rather than to the claim, and you'll find this language in the older forms on the declaration page. Now, this language has important consequences which have been covered in other videos addressing the strategy of presenting your claim. The property coverages section of the policy sets forth what type of property is the subject matter of the insurance that is provided. It's divided into 4 parts: coverage A, dwelling; coverage B, other structures; coverage C, personal property; and coverage D, loss of use. Under coverage A, the insurance applies to the real property in which you reside. If there is an attached garage, carport, porch, or other structure, it would also be included under this coverage and subject to the coverage A limit of liability. Note under coverage A that land is not covered. Coverage B covers any structures that are permanently affixed to the realty but not attached to the dwelling. Some examples of property that would fall under this coverage are detached garages, fences, in-ground pools, sheds, and so forth. Now, several points are worth noting. First, if you have another structure that is rented as anything other than a garage, you must have separate coverage or a separate endorsement to cover that structure. Now, this coverage is widely available, so be sure to speak with your agent regarding this. And second, if you are conducting business from this structure, you must also obtain separate coverage for this exposure, and this coverage is also widely available. And lastly, this coverage is additional coverage over and above the coverage A limit of liability. Coverage C applies to personal property. Under the homeowner's policy, your personal property is covered while it is anywhere in the world. But if you are trying to cover your personal property at a second residence, you really should purchase a separate policy for that location, as the coverage under your primary homeowner's policy is severely restricted. The other significant point is that the limit of liability and coverage on many classes of personal property is severely restricted. I'm not going to go over the coverage restrictions or the payment restrictions here. Rather, I encourage you to read your own policy for these restrictions and limits, but just know that they exist. One point to keep in mind is this. If you have a loss that involves property that is subject to one of these restrictions or limitations on how much the company will pay, say for example money, be sure to make the claim for the full amount of the loss and not the lesser limit of liability. Now, the limits for coverage C losses is also additional coverage over and above that which applies to the dwelling and other structures. Coverage D is your loss of use coverages. There are 3 types of loss of use coverages provided by the homeowner's policy. They are additional living expense, fair rental value, and civil authority. Additional living expense is also known as ALE and reimburses you for those additional expenses that you incur to maintain your normal standard of living when your home is rendered untenable in whole or part due to a covered cause of loss. Fair rental value reimburses your lost rents when that portion of the home that you rent is rendered untenable due to a covered cause of loss. And civil authority reimburses you for living expenses incurred when you are prohibited from using your home by a governmental authority as a result of damage to neighboring properties caused by a covered cause of loss. The homeowner's policy contains additional coverages as well. These are listed in the additional coverages part of Section 1. These additional coverages vary by company, and you'll need to check with your own policy for specifics. Some examples of additional coverages are as follows: debris removal, reasonable repairs, trees, shrubs, and other plants coverage, fire department service charge, property removed, credit card, electronic fund transfer card, access, forgery, and counterfeit money coverage, loss assessment, collapse, glass or safety glazing material coverage, landlord's furnishings, ordinance and law, and grave markers. Some of these additional coverages increase the limit of liability available under the policy, and others do not, so you'll need to read your form for the specifics. As I stated earlier, the Homeowner's 3 coverage form is open peril on the dwelling and other structures, and named peril on the personal property. Under Section 1, perils insured against, coverage is separated between dwelling and other structures and that for personal property. When reading the dwelling portion, you should note that all the damages are covered unless specifically excluded. So everything you're reading is an exclusion or an exception to that exclusion. With the perils insured against for coverage C, nothing is covered unless it's named as a peril. You should be aware that there are exclusions that can be contained within a peril. For example, wind is a peril, but there is an exception for property contained within a dwelling unless the dwelling has first been damaged by wind and the rain or water enters through that opening. The next part of the policy contains the general exclusions, and these are exceptions to coverage regardless of what else has caused or contributed to the loss. As with everything else, there are exceptions to these exclusions, so you must read your policy carefully to understand what these exceptions are. If all this sounds confusing, it is. So if you need help reading your policy, let me know, and I'll see if I can't point you in the right direction. Now lastly, under Section 1, there are conditions. These are the terms that you must abide with in order to receive the benefits of the policy. They also include information about how any claim is to be adjusted. There are additional conditions in the back of Section 2 entitled Section 1 and 2 conditions that set forth conditions applying to the policy as a whole. For example, you'll find language pertaining to cancellation, subrogation, liberalization, among other conditions contained here. Well, that's it for a primer on how to read your insurance policy. I hope you found this information helpful. This has been Benefit Bill, bringing you information that you can use to take charge of your claim for greater gain. Have a great day.